I've only had, 12, 13 years Bitcoin, but started out with several buy signals based on this type of data, and then it goes down a couple for the next run, down a couple for the next run. And now Ethereum is doing the same thing. It had a big cluster like this, and then it goes down a little bit in terms of number of buy signals. So this is very bull. Anyways, I find it kind of bullish for HEX. What does it mean? I guess we'll find out what it means.
Yeah, for sure.
Hey, so Woody, I assume you're. I always make bad assumptions, but I assume you're Europe or UK.
Yeah, I'm on the island. In the UK. That's me, Crispy.
Yeah, I've been over there a couple times. I've had some good times there.
Yeah, it's a good place.
Let's go see. That's our 5 number. Yeah, I have my own morning rituals, things I go do. I know I'm sharing the screen. So.
Very useful. I'm learning. Like, what's this one? Hexfire IO.
Yeah, this is just because it's mine. So just pretend you don't see that part. I'm not trying to promote anything. Just look at information, see what's out there. So share rate's going up pretty good. We had 23,059. Oh, today is gonna be a nice day. All right, so someday today. So looking at this number that's up here, sometime today, somebody will have the opportunity to end a stake, and may have already happened because might be delayed a few hours. Somebody has the opportunity to end a stake, and the new share rate would be 23,072.73. That's nice. This is on the HEX side.
It's lower than the 31. Oh, I see, because there's more coming out tomorrow, and that will bump the share rate. I get you.
Yeah, you know what I did is I corrected both the years and the months to be smart enough to look at the previous months and years and just not put a lower number. So if you look here at 2022 December, I have a number that's the same as the previous month in there. When it goes into January, same type of thing. Now, the reason for that is this, and this is why I didn't change it on the daily. Every day you have hundreds of opportunities for the share rate to change, but there can only be, but not all of them are successful. All right.
Is that because they don't execute, so it doesn't actually happen?
Yeah, there could be a couple reasons. One is, it's exactly that. One is that just in general, there's hundreds of stakes that end every day, and all of them do the calculation for new share rate, but some of them just won't be higher than the current share rate. So they just become, it just doesn't matter. But like today, with the 23,072, if that guy doesn't end his stake, or the lady doesn't end their stake, then this will never happen. So yeah, it's dependent on actions of people. So in that case, then the next lowest one for today will take its place, or tomorrow there's one for 23,096, which will be another nice increase.
I get it, Crispy. You've really been into this. I didn't realize you'd put this together. Round of applause.
Oh yeah, thanks, Woody. I've been trying to go out and promote it a little bit. Promote's probably a bad word, but for anybody who's interested, I find this interesting. So this is something that I did for myself and on my own spreadsheet. So I started putting it on the website, so that other people could see it as well,
Oh, it's massively useful because otherwise you're holding it in your head and just looking at the data and just trying to get an impression of what's happening. But this really shows you it's stepping up, so you can demonstrate with your presentation to newbies who are technical but don't exactly know how Hex has been structured. You can actually show share price go up.
Yeah, exactly. My big joke about this is I spent a whole bunch of time building this particular part out, and I proved that share rate goes up.
Right. Which you can see from what's it, the Hex staking website. You can see it, but it's a kind of scrubby graph. It just a line that bounces around. But this is a lot clearer.
Yeah, it's a little bit different sort on the information. What's scary, I don't tout the numbers a whole lot, but 130,000 hex in 15 years for T-share. I mean, that is just massively hard to imagine for me. Now, these numbers are all based on, so I'll start it this way. They're based on 30-day moving average of daily payouts. Right. So in order to get these numbers, you need to know how much yield each stake is going to have. So these are guesses, right? It's all a guess. And so far, I found that the 30-day moving average is probably the best way to predict future yield. That can change at any moment. I actually think this model is very conservative. And what that means to me is that share rate will go up faster and higher than what I think it's going to go up to, according to this chart.
Okay, not tracking the bit with the moving average, because surely it's got nothing to do with price. It's just the moving average of the number of hex per T-share. That's what you're
Yes, exactly. Paid out per T-share.
So at those points where a T-share, say, is over 100,000, how many hex between now and then will have been issued? The sort of how many new hex will be in circulation?
It looks to me, and these are just rough numbers, that actual inflation realized is about 2% or less per year. The average goes up to about 2%, maybe 2.2% when you include 29 and 30, 2029 and 2030, because there's an awful lot that comes out. But generally, it runs a lot less, right? And that's because people are staked out, so that inflation is kind of locked up, right? So it's about 2% a year is a rough number.
Right. So as those stakes end in the sort of, and that coincides with the average stake length, I heard from Richard on his recent 2 video interviews where he said we've bumped average up to 7 years. So a load will come out in 2030 and we'll see a spike in the T-share cost.
Yeah. I mean, I don't know what'll happen with the cost of the T-shares at that time. I haven't been able to mentally put my head around it, but we do see a little bit of an increase based on our current information, right? The 29, we do a year over year of 16, but 30 we start going down. But it will be a huge event. Let's go look at those. The best way to look at it. Look at payouts. It's going to be a huge liquidity event in terms of HEX, because in 29 we're going to have probably the most HEX come out and be minted in the history of HEX, and probably maybe for a good time in the future, and then do a repeat in 30. And for 29, most of that is at the end of the year, last 3 months of the year. So how this will affect the entire system, other than the inflation coming out, I'm not sure what's going to happen. I mean, you can jump to the conclusion and say, well, people are going to sell, and that's probably true. Some will sell.
Yeah, but it might be matched by demand, you know, the network effect. It could have been better understood. They might restake.
Yep, agreed. When we look at this kind of a chart, it's a little misleading, right? Because just like you said, all this time between 22 and 29, this may all get filled in. This may look like a it might look like a ladder rather than a cliff, you know?
Yeah. Because, you know, the investor's view is, okay, I want to get some stakes ending before that massive spike in yield, producing more coin.
Yeah. And you can actually see that, you know, by month. So if I was thinking about that and I wanted to front run this, I would start with September. If I felt comfortable going that close to October, probably more like a sell the news, buy the event type of thing. But if I thought I needed to pull a stake out and sell some of the HEX, I probably would want to do it before I got to October. So I'd probably look at August. And then once August and September filled up, then I'm probably looking at June or July, and then May and April. And that way you're building backwards.
Yeah, because as you make this information available, people can work it out, it'll start getting priced in at some undetermined interval prior to the massive increase in potential liquidity of available HEX.
Yeah. Yep. So, like I said, I don't know. I can tell you 100% these numbers are wrong, but that doesn't mean that this isn't the shape of what's going to happen. So in 2029, 30, we are going to see a huge amount of liquidity. And I say wrong because I don't know what the payouts are going to be. They may change drastically.
Yeah, because there are variables running up, some more improbable than others. But if everyone emergency end staked, those stakes wouldn't be there in that year, for example.
Exactly. Now, the other thing that occurred to me is if somebody was really wily and very thoughtful, they probably would come into this 2029, 2030 area. And 29, we had the last 3 months were really high in payout. And then as you go into 2020, or excuse me, 2030, the first 3 months are high in payout, is to be ready at that point, perhaps by having taken profit or other means, but be ready for the redistribution. Because this is likely going to be a huge redistribution event, it would seem, right? All these people held all this HEX for 10 years, they get paid out. A bunch of them are going to restake, but there's also going to be a bunch that become available, which probably leads to downward price action, which means being able to pick up at that time HEX at a lower cost than whatever it was at that time. So having planned ahead to be able to buy this potential dip would be a good idea, I think.
That's definitely one to teach my young folk.
Yeah, I don't know if I'll be around, but but if I was around, I'd be thinking about that. Yeah.
It, yeah, in what do they call it? Generational wealth. We're going to have to educate the generations if you got something. Or
Yeah, it's our job. Well, for me, it's my job. I see it as my job as both a person and a parent. But yeah, yeah.
but this really helps. I mean, I don't know if it is a reward and a sign of gratitude, but I can immediately show the young guys, hey, look, here's a chart. It makes it a lot easier to present because I'm not going to sit down and make presentation material. I should.
Yeah.
I'm really grateful for you making this.
Oh yeah. Yeah. Thanks, man. You're welcome. It's these are the types of things that I think about, so that's why I did it. You know, probably spend too much time working on this stuff, but it is different to see it visualize, and we have lots of tools in the community, of course, and so we're going to continue to have lots of tools. Um, but looking at things different ways is helpful, I think. The the funny one here is that this one took me a while to figure out, and this is again we looked at the number side of it a moment ago, where these numbers were on that little the table when it was showing daily and whatnot. But this is the picture version of that. And how I got into this is right before this 700 increase, which looks big on the screen, and it is big. I mean, it was 3-4%. But it's not that big, right? I mean, it's not like the world ended because I couldn't do this. But I was planning to stake some HEX, and right before this, and then it went up 700 a T-share. And that kind of irritated me. Like, how come I didn't see that coming? That was going to go up. And I figured there has to be a way to figure out when it would go up. And so this is my attempt to kind of figure it out. So, staking usually function of people having cash or dry powder, right? I mean, they just if you're a believer in the system, you're going to stake, but if you're going to stake, the best time to stake is when you first become aware that you want to stake. And if you could do it, you'd do all your staking on the first day that you figured out you wanted to stake, but that requires all the cash, but or everything that you would invest. And so most of us aren't in that situation, right? So we have to figure out over time how to do it. But to the extent that it could help you, I would stake probably the 8th of September or before, and not after the 10th of September this year, because we're going to see another 700 increase, probably something like that.
which means you want to program your end stakes so that they're just before spike, so that you've got a chance to take profit, but then also restake.
Oh, that's an interesting thing. I hadn't thought about that. But yeah. So if you were doing a shorter staking time frame, or even a longer time frame, maybe that's a good reason to extend this out. Even if you're doing a longer time frame, knowing when those were going to go up, and you're doing a stake, you'd want to try to time it so it happens before it goes up. Yes.
Yeah, it's a more pragmatic and natural approach to, becoming familiar with the asset and trusting that it can yield real increase in value. As opposed to the other one, which is take your bag and 5 it and just go for the max. But there are a few variables on that one as well. I mean, it's a long way out. You'll have a lot of hex, but what's it going to be worth?
Mm-hmm. Yeah, we don't know, right? You're right. We don't know.
Yeah, we don't know for sure.
Hey, Woody, do you mind if I steal that idea? I'm gonna write that down.
No, man. Yeah, Crispy, do it.
So I envision having a staking strategy page at some point with any collected strategies. And that one, I've been looking at it totally the other way, which is about, when to stake, not end stake.
Because becoming liquid at various points is useful. Then you can use funds for other assets and life, and you can go back in taking a fresh view on actually how this market is evolving. And it's good for all of the people who've just decided it's going to be great, because that kind of activity pumps their bags in a positive way. It's not a negative thing.
Yeah. I think what I might do is I might turn this on for the full Quattro Cinco. So I have it available.
Can you put a control on the chart so that you can hit a plus button and the time line, a bit like on TradingView kind of chart where you go 1 year, 5 year, Quattro Cinco, just to growing the x-axis?
Yeah, sure. Yeah, I can do a bunch of different things with it that I haven't done. They're just a couple buttons, really. Now, the reason I went out 2 years is because I feel like this is fairly accurate, right? But going out 15 years, I don't want to provide people with a whole bunch of bad information, about numbers. You need to put like flashing signs all over the place, just saying these are, these are made up numbers. It's kind of a guess. But what you just talked about, being able to know when to set your dates in the future, to some extent, I mean, again, the numbers still aren't going to be exactly correct, but you'll see the jump. Maybe I'll throw that up here on the screen. Kind of overpowers my caution. That's what I'm thinking. I'm thinking like, well, hey, that might be well worth it, to show the entire model just for that reason. If you get my point.
Yeah, absolutely. And it also helps, say you're negotiating getting funds in, you have a look at that chart and it may adjust, other business decisions so that you can get in. You may be negotiating a job that pays you in 3 years or something, or talking to, any deal. If you've got that in front of you, you can make some. You can improve your profitability. Yeah.
Yeah, I've got this concept of free the data, you know, so that we have that power. It's not that this information isn't available to you; it is, but you know, you have to go through a lot of work to get there. You know.
I reckon, reading between the lines, you've done this sort of thing before with the whole Power BI and charts from data.
Well, sort of, yeah. I mean, yeah, I've been selling the services for it for years, but after you know, at my old job, I've been selling this types of service. I personally have been more involved with data, but now I understand why everybody would tell me I just can't do it that quick, Crispy, because I've tried to do this stuff myself. So I'm kind of learning as I go along.
So I'm looking at the good accounting. I think I'm weak on understanding the good accounting because I don't think anyone's ever really spelt it out for me. All I've got is in some jurisdictions, not actually minting the hex immediately can be beneficial, I think, for capital gains. I think because if you don't take the profit for a year, it's not considered a capital gain. Do you know anything about it, Chris?
You know, you mean as far as why somebody would do it? Is that what you mean with some motivation?
Yeah, the why, and I'm a bit fuzzy remembering exactly what it is. It's like you end stake, but the hex isn't minted for some time, or do you have to action when it does get minted?
No, if you good account, you can come back anytime and actually end the stake. You know, and you don't have to. You don't have to wait or anything. So it's a little bit of game theory, right? So there's certainly the potential implication that for some reason that you have Hex coming out, you don't want it to come out because it's defined in some way that you have to pay some sort of tax if that's the case. But it really has to do with your jurisdiction. For me, the good accounting feature is more, in my mind anyway, it's more about game theory than it is about taxes. But I don't know why. I mean, maybe I want to delay a little bit before I actually take it out. But I don't know why I would actually do that. Um, you know, if I if I have a stake, it's a lot of hex. It's going to come out. I got to take it sometime. Um, Rules lately in the U.S. seem to favor you don't have to sell your asset. So that being the case, probably I don't need to worry about paying taxes just because I ended a stake, right? So I don't have to worry about that. So why wouldn't I just end it rather than good account it? Maybe there's a little game I want to play, want to hold off, but you know, maybe I don't want to have custody of it for some reason. I don't know, it's maybe personal reasons, but there's no real functional reason that I could see it. In fact, I'd probably want to actually end the stake and restake it. I mean, why not restake it, assuming gas costs and all that stuff is okay. I would rather restake it and just earn at least the few percentage that I might earn for a month or two while I'm waiting to decide whatever I'm doing.
Yeah, right. I don't know if it's relevant, but say you made a loss on some other asset, you may want to then, print the hex if that is the event that makes that chargeable, and then you can offset the gain against the loss and not actually have to pay up anything.
Yeah. Yeah, exactly. Exactly. But once you have once the tax thing isn't there anymore, what difference does it make, So it all depends on, I guess, whether or not you have that, whether you have that need. Then on the other side, of course, there's the other side of it is doing it for somebody else. It's a whole different story.
Yeah.
So you see how this line loses definition when we go out for 15 years? I haven't.
Is that scaling? Is that because it's 80% of the move? Well, it's comparable. It just looks like a straight line, really, when you look at it over that period.
It does. It does. The anomaly up here at the right, I haven't corrected this yet. I need to correct it. Is what's happening is we have stakes that have been made out in this time frame of 36, right? And they're not going to win the race and beat some of the stakes that came out earlier in 36. To correct that in my little measure, what I had done was I just said, hey, listen, if you're on a particular date and for some reason there isn't anything that's ending that's going to match or be higher, then just assume it's the same as before. So this should just be a straight line going across. I think I went out 60 days into the past. I need to go out further. And that'll correct that and make that a straight line. So to your point, I threw these sliders on. I should be able to do a couple different things. I don't know if this is the right way to handle it. Maybe I'll use this or give a date thing, but you can kind of like use this to slide your definition and you also put some filters on on it. So we were looking at what 2023, right? Kind of cool that this goes down like that. Maybe I will change this and leave it.
Your start date is pinned at 2020. I'd like to grab 2023 and shift it to the origin.
Oh, you mean go all the way back?
No, say you're looking at it as it is now. Move the 2023 to the origin, to the where the X and Y start, where you go okay.
No, you mean something like that.
There you go. I see. Right, there's another knob on the slider. Yeah, that's it. Okay, that's brilliant.
I guess bringing this down. I haven't played with this one before. Let's see what it does. So you can change your graph up all over. But you see how it doesn't show those. I mean, we can still see them, but it doesn't show the steps the same way, So I think maybe a way to handle that would be to put, something on here that it does a filter by date. Now that's one impressive graph right there. That makes it look very steep, doesn't it?
Yeah, it's funny because I'm having a different emotional reaction to seeing that steep, because when you do it the other way and you just look at a year, it looks pretty steady, so you don't panic and go, I've got to buy. You just go, okay, I can steadily DCA and it's not really going to hit me. But when you see it like that, it's like, better get in as early as possible. It's another motivator to get in as deeply as possible earlier.
Well, this what we're looking at here is reasonable, right? You like mentally you can look at this and go, oh yeah, look, it goes up at a steady rate. Probably should stake earlier than later. This one here, we look at it this way. Go back to that. This is all marketing. So this is I laugh every time I open up an app like Robinhood or anything else. This is what I see. I see these big green things. It looks like something went up overnight, 100%. It went up $1 or something, and it's all about marketing, right? If you saw this, look what's happening with the share rate. You better buy now. You might get that FOMO, right?
Yeah, absolutely. Yeah, if you're into statistics, it's something you pick up early on. It's like you can manipulate a graph and say it's flat or vertical or whatever, but I mean, in engineering, we do rate of change. So we're looking at velocity and acceleration so that you normalize it so you can't have someone emotionally manipulate you to get you to do what they want by presenting the stats.
Yeah, exactly. Yeah. Yep. Yep. That's why they say you could make the information fit your aim, whatever it is that you want to do.
Either emotion, if you analyze the emotion and think, what does it really mean in real terms? You come up with, well, we know T-share goes up, full stop. And the soundbite, I think it goes right to the foundation of this. I think I've got this little story in my head of Kai reviewing the contract, and it's they figured out they really wanted to make it impossible for it to be beneficial for someone to come in later. And this is part of that mechanism to earlier better.
Oh, it's brilliant. It is absolutely brilliant. Well, not only it's not a punishment, in my head, it's not a punishment against people. What it's really doing is it sets it up so that in 5 years or 10 years or whenever, 3 years, new stakers can come in and still get yield. That's the setup.
But it's I've been analyzing why the skeptics, and Richard was talking to it on this interview. So it was like Ponzi pyramid bubble, and then why this isn't, and his response to that. And it's an interesting puzzle. And it's why it doesn't have a dead stop.
I'm sorry, I spoke over you.
Yeah, no. So why trying to envisage and articulate why HEX doesn't have a dead stop, as those three, negative financial schemes I mentioned earlier do.
Sure, I think it all comes back to what he said, and I think a lot of us have already concluded. Forget about HEX for a moment. Why go into crypto? Right? You can ask that same question to yourself, like why crypto? I mean, it's this other stuff that's created digitally. How does that have value? It only has value because people buy it. And so any asset until something new happens I haven't seen, any asset within crypto, the only reason it has value in my mind is because people buy it, right? So enough people buy it, the price goes up. Enough people sell it, the price goes down. And so I'm oversimplifying it amazingly. So I reject these stupid arguments that somehow our token HEX is like not viable because right? I mean, it doesn't make any sense what they're saying because they already believe in crypto, but they say that what you have can't go up and be useful.
Yeah, that's pretty much my conclusion. Analyzing it, it's an extraordinary hypocritical conclusion. It's like, wait a minute, why do you like? They both can go from A to B, and this one is more secure, evidence-based. It's just sort of if you, but yeah, it's not invented here kind of thing, or it's not the tribe I got into initially. How can you come out with something better? So I think is also a psychological resistance to adopting a new, better.
Agreed. There may be some inventions that come along pretty soon that affect us in real life that come out of crypto, but currently everything that comes out of crypto is a function of people believing that it has value in buying it. And so there isn't a lot that happens for us because crypto exists. Most of us could just go on with our lives and never be involved in cryptocurrencies, right?
Yeah, yeah, very true. But yeah, linking it to the real world, the file storing, geo. There's also sort of a list of, breaking out of just being a ledger and a limited amount of units as a kind of useful store of value. This being able to use it to exchange, tangible items for stuff, because it's not really fueling shopping. I mean, you can buy a few things with it, but it's but linking it to actual things, and you probably know more than I do, but yeah, that will be a seismic shift, I think.
Yeah, agreed. I want to do things with the blockchain. I want it to do stuff for me, We shall see. If you ever, I know you mentioned good accounting. If you ever want to dig in deeper, there's a panel up here for this. You can come look at all the stakes that have been good accounted in the past, but aren't ended yet, and kind of get a feel for that. There are quite a few, but it's not overpowering. There's about 2 billion hex that's been good accounted. That
And
could
what
be
happens when they actually release it? Do you have that as well?
Yeah, for instance, if we look at this, I forget what's the sort. The sort's on the late penalty up here. So when this, if someone comes back to this address and they own their keys and they end this stake, which is now the only action that could be taken because it's been good accounted, it will go through and look at what how the stake performed. It would come up with an estimated payout of 16.7 million and say, oh, there's a 10 million penalty. So that day, the penalty would be issued for 10 million, and half of that would go to the OA, half of that would come out to stakers. And this address would receive the 5.9 million.
Right. So the good accounting date is when they've ended the stake and put the potential, call it yield or inflation, but the new hex on hold. When I assume there is another data point, which is the date you actually hit the button for good accounting to print the hex.
Right. That would be called the end date. Yeah. So this title here that says stake end probably should be expected stake ending. This was what the end date of the stake was, and it was not ended. So therefore, the GA date, good accounting date, was this date because that was the day that somebody actually did the GA. And if the stake was ever ended, there might be another column, if you envisioned it, that said it actually ended the stake. And there are, of course, examples out there that have done that.
But that actual third column, isn't that important for your graph? Because are you not estimating when these HEX come on the market and pump the T-share price?
That's why I like engineers, man. I'll tell you. Yes, very important. But here's the thing: it's I don't know. It's important in itself. I don't know how important it is overall. Now, so for the the effect is this: is that penalties that are paid from these stakes will increase yield. And if yield increases, then potentially the T-share rate changes and goes up, right? So it would skew my graph to upwards, right? But it doesn't have a direct effect in that it just changes the number. It affects the entire system, right?
Right, but you're factoring these end stakes in at some point of the calculation of the T-share ratcheting up.
I have not. I have not. That's what I mean. That's why I appreciate that question. I've been trying to decide what to do with the remainder. I call it the remainder. But just fell into saying that. But yeah, because there's this remainder, which this represents a risk. If you think in terms of risk management, that somebody will come back at some point, and we would have 2.2 billion hex minted. But really, is it? We have days where 2.2 billion come out. So is it really much of anything? So on the scale of risk, probably low, right? Even because first off, nobody's going to come back and end all of these, right? Because all of these people would have to end. And even if they came back, how much damage could one person do? Well, these are all OA addresses up here at the top, these big ones. Maybe hard to see. I believe they're all OA addresses anyways. And so then you get into these lower ones. So what if a guy came back and, you know, claimed 84 million? How much would that move us, system wise? Not a lot, with no penalty, right?
Right.
So
So compressed over time, it's the estimated payout that definitely moves T-share, because it doesn't matter whether it goes to OA or not. It doesn't matter whether the good accounting guy doesn't come and hit the button to actually print the stuff. At some point, it's going to move the T-share by a fixed amount that you can compute.
yeah, it's just the time frame when you want to do it. So I thought about averaging it and saying, make an assumption like 50% of it will actually come out, and somehow predict that, but I don't know how much it changes things.
Well, the earliest you could put it is the stake end. And then you're saying you could compute an average of how long it takes for people to come and collect their good accounting stuff and put it on the market. And then there's another weighting, which is that average is probably different relative to the amount of it. And you're saying that that's all a little too complicated, given that it's a small amount of estimated payout. It's 2 billion though. Is that?
I would love 2 billion hex, by the way. So if anybody's listening and says, if you think that's low, go ahead and send it to me. I like 2 billion. But in our environment where we have billions that come out every month at times, where we have those years, I mean, it's a relatively small amount.
I get it. Yeah. So the 80-20 rule applies. It's like that 2 billion, which is everything that's good accounted, is like, it's not going to move it more than it moves in a month.
Oh, correct. Yeah. Yeah, because if we go look at the payouts per month, we have 3 billion a month that's rolling in the rolling stakes, and another 2 or 3 billion that come out pretty regularly. I mean, you can see once we get out past 45 days, people aren't doing that stupid short staking. So it's pretty solid. 2 billion a month, 2 billion a month, 2 billion a month. We have some low months, but 1 to 2 billion is pretty normal. And so first off, with good accounting, no one's coming back and doing all of them. That's not going to happen. And the biggest ones that are there seem to be OA related, so they put them in a whole different category. The other ones are just hundreds of millions at the most, or 50 million at the most, maybe, and they're individuals. So their ability to really change the entire environment's kind of limited, right?
Yeah, yeah. But those 45 rolling state, they've got the opportunity to take advantage of the price action and do that strategy as you were describing on a longer term, which is get liquid before a pump, in terms of new hex coming on, which would cause a dip, and then come in afterwards with a buy and buy more. So they could sell at a higher end of 40 days, sell, take profit, restate partial, a whole lot of other stuff comes out, price movement down, and then use liquid to buy more and beat the rate of rise of T-share kind of game.
Yeah. Yeah. So there's probably 3 types of people at least that are included in that group. There are people that, so let me set the stage. When you look at a month, about 75, 80%, maybe, sometimes a little bit less, are short stakes that come out every month. So about 75 percent of those. So it's close enough to 80%, to say 80-20. So 80% that come out every month are short stakes. Of course, you can't see that if you project into the future. You can only see that like for August because we're getting close to the end of the month, one more day, right? Still have quite a bit of HEX that hasn't been paid out yet. But so most of this will roll over, and then this number will look more like 6 billion, or September will look like 3 billion. And then you see these numbers shift quite a bit, but that's because 45 days can only be counted within 45 days. And I say 45 days or less, right? So that's kind of the stage to set. Is what's happening is these are longer stakes that have been out there for a while that span into months, and then we have these short stakers. Now those short stakers, one, there are people that do it deliberately. They have a motivation, right? And one of the motivations is to increase the share rate. Now, people don't understand this as much, but when we look at our share rate chart, you can see it that share rate goes up little tiny bits, particularly in the past data, and then you hit big steps, right? And what happens is that the new stakes kind of build on whatever the last big stake was, in terms of that math and that calculation. And so these 45-day stakes, anything less than that, they're really driving the share rate up in between the big steps all the time. Otherwise, the chart would look much more like a staircase, in at least in the past, than a straight kind of line that we see. So you got those people, then you got traders that you mentioned, then you just have people who don't know any better, right? So those are the three groups of people. Now, the downside of this is that these folks are losing about 10% per year. So every time, when I say losing 10%, what I mean is losing the power of yield, about 10%. It costs them 10% more by the end of the year, at least, at the moment, for the same amount of yield. And so we can just rough it and say they lose about 1% of their buying power every time they restake, because they went short. And all they would have to do is, instead of going short, is the ladder. And perhaps they are laddered, right? That's an analysis that's hard to get to. Perhaps they are laddered and we're just looking at one of their rungs, right? But I think not, because they're the days on those stakes are so short. So after, and this is where most people will say, "Oh, what difference does it make?" They've got millions of hex, so it's fine. But after 100 months, their stake will be very, very low, right? They won't have very many T-shares after 100 months. I guess it could go close to zero, right? But not quite to zero, because they just won't be able to do it. Won't be able to rebuy T-shares.
So the rate of increase of T-share is not kept up with end staking every 45, no matter how bigger pays better you've got.
Yeah, I mean, what's if we just rough the numbers, right? If you're short, you're not getting longer pays better, right? Bonus. You're only getting bigger pays better. And you got to put a lot in to make the numbers change. But let's say you did, and an individual stake, the most you can get is 10% more, right? The most you can get is 10% more, in terms of T-shares. So I guess I'd have to go look at the numbers a little bit further to see what happens with
But
each of these.
I mean, that 10%, that beats the 1% negative that you mentioned earlier from this 45-day action thing.
Yeah, I have to think about that a little bit.
I mean, can you approximate the T-share increase to a rate? Just trying to think what the numerator and denominator is on that graph. Well, I've not actually studied I've read it, but it's not in my head what the algorithm is for pumping that up, what the equation is for the T-share increase.
Yeah, it's actually fairly simple. It's your staked. So the calculation itself, what it does, it looks at an end stake. It says how much yield did you get? What was your principal? What was your total payout? So you have total payout. Then it looks at the number of days that you staked, and it takes those two and goes and calculates what a new bonus heart payout would be to you. So what would the bonus hearts be? It comes back and includes that in the amount. So you have a total, and then it's divided by the number of days. I can go pull the actual calculation, and there's probably a constant in there that I missed somewhere having to do with existing T-shares. But in general, those are the kind of numbers. Well, let's see if this changes screens with me. Let's see. Okay, so went over. So we can go look at the contract. So instead of me making it up and trying to remember what it is, we can go over to HEX and go to the contract. let's go to the contract panel. We're going to go to the code for the contract. And let's just do new share rate. So there's a function, I know this probably, well, I'm sure you get it. I mean, there might be some other people, you know, listening in here that maybe haven't seen code before or whatever, but it's just simple functions, very straightforward. Yes, you have to understand the language to be able to read it. I don't understand it 100%, but I get most of it. And so the big thing to understand is it does its new share rate calculation. And if the new share rate is higher than the current share rate, it sets the new share rate. That's as simple as it gets, right? So there's further code in here that kind of goes into actually calculating that. Let's go find the calculation. I'll go down to the function. Okay, there it is. I didn't see it pop on the screen. All right, so here's the actual calculation. I started to go down a bad path by trying to remember it from memory. So you have the stake return plus bonus hearts times the share rate scale. It's set at 100,000 up above in the variables, and then it's divided by the number of staked shares that you had in the past, and that gives you the new share rate.
Got it. That was another great lesson. I followed you on that. So bonus hearts that's hex times 10 to the 9, I think, isn't it?
Well, there's two calculations. One of them's longer, pays better. The other's bigger, pays better. And there's some approximations you can make, but yeah, you might be exactly right. But that's the number, right? But there's two pieces to this guy. I'll just type it. If I could spell correctly.
There's a cap in there. I wonder what the constant share rate max is.
It's something around 1.2 trillion.
Okay, laughing. That's not going to happen.
Yeah, so yeah. Who told me about that? Kyle, I think, was explaining it to me. Because I was asking about the cap, because I was wondering if there was a cap on changes, but there is not a cap on changes. But there is, but it's that cap. It might even be 2 trillion. I don't know. I don't know what the number is. It's a very big number. You got to do that bit shifting thing with the number to figure it out. And I still don't even understand very well what a bit shift is. I mean, I get it, but I don't get it. You know, I mean, I understand the words that you're shifting the numbers, but I don't understand the functionality really well. I've tried to read up on it,
what? Okay, well, a bit shift in its simple pure form, if you bit shift binary 1 to the left, you're effectively multiplying it by 2 because it becomes 4.
Yep, I understand the words. It's fun. It's funny, right? That we all have different viewpoints on things and understandings. But yes, I understand. Yeah, what you just said.
But I don't relate. Yeah, I can't relate it to that. You know, you referenced conversation with Kai. How it relates to the need for share rate max.
Well, what they do is they set a maximum. Let me go look up there and see. Let's look capped up. Then we go. Well, you know, we were doing bonus hearts, so let me show you bonus hearts real quick. So bonus hearts are, it takes an input to get the bonus hearts, and that's where the stake that's being ended, it's assuming that you're going to restake everything, so the new stake hearts, and that you're going to stake it for the same number of days. And so then it goes through stake bonus hearts function. And the stake bonus hearts function, you know, I don't know why it's not going anywhere for me. I'll use this one. So this is the bonus hearts function, stake start bonus hearts. And there's actually an explanation in the contract that explains how they do the calc. And that comes back as a return to those bonus hearts. It's what everybody complains about on the staking window, right? Because they're like, I was supposed to get these bonus X, but they don't get bonus X. You get bonus T-shares, right? Allocated based on these. And so this is that calculation, just to finish that off.
Okay, I'll have to study that.
All right. There's mention of caps in here, I guess, more than I expected. I really wanted to go up to the top. Let's go that way. Let's cap penalties. Maybe it's not called capped. We saw it. We saw the thing when we were looking at share rate, right? So if I look for share rate, all right. So here's that explanation for share rate. So it's got to be greater than to get it. Right, we got that. Then it does. Okay. Well, the stake return's got to be greater than the hearts that were staked, right? So that part. New share rate has got to be greater. And then the share rate max, it wasn't called a cap. Share rate max. So if we go look that up, all right. So this is the part that I couldn't quite figure out, right? So this is the internal constant. So it's using a unit size of 40. So if I understand this correctly, right, you're shifting 40 to the left.
Okay, so that's 80.
Yeah, there's something more to it though than that. I'm not sure, right? Because this calculation is using this unit size of 40. So one bit shifts to the left 40, but I couldn't figure out what the -1 was. But anyways, when I was asking about it, I was able to calculate it using some calculator and some math online to a very high number. But when I was talking with Kyle about it, when I say talking, we just exchanged text messages one time about it. He was saying it's somewhere in like the 1.2 to 2 trillion.
Yeah, no, I'm not familiar with that operator there. Is that shifting 40 times?
It may be, yeah.
Okay.
But I don't know how the -1 comes into it.
That's just how can I express it? So if we, in my simple example, took 1 and shifted it to the left once, that would give us the value of 2, and we subtract 1, so we end up at the max of the significant, I think it's called significant, no, the units of the prior column. So how can I put that better? So if we do it twice, if we shift 1 twice, it goes 1 to 2 to 4, we subtract 1, we get 3. And that's all the bits set to the right of that most significant digit. So it's a bit like 2 to the 8 is 256, maximum value 255, because it's a bit Mayan, 0 is a value kind of thing, something like that.
Yeah, yeah. But so in our thinking, right, with this, the simple bit shifting that you're talking about, right, it would bring you to a, you know, to a maximum of what? So 40 would shift and become 80, right? So it's not 1.
No,
Whereas,
I think that notation there is 1 shifted 40 times. So if
right,
we
but that would mean 39, right?
No, I intuit that that's actually 2 to the power of 40.
Now I need a calculator.
It's a big number, but it does fit into calc on a compute. So
2 to 40, right?
Yeah.
All right, so that's 1 trillion, 11099. So that's where we get to the trillion number. Well, thank you. I just learned something new for sure, because I really could not grasp this for some reason.
Yeah, it's that notation is not common. I mean, it probably is. I'll probably have to, when I go and research it, I'll probably find that that operator is available in all programming languages, but it's not something you do every day.
Well, I think it varies. In Solidity, it looks like this, right? Because obviously this is Solidity, right? And so I could find some references to it, but it assumes you already understand what the hell you're talking about when they say bit shift. Well, I'm pretty sure that 80% of the population of people, when you say bit shift, they don't know what the hell we're talking about at all. So it's a little esoteric, maybe.
And I'm just searching the Solidity bit shift operators.
And that's why we don't need to look at the contract. You may want to look at it, but in general, right, people are able to consume visuals a little bit better than that stuff.
Yeah, but it's just notation, isn't it? It's just like, it's an operator. I don't need that in normal life. I don't need to know that 1 double chevron 40 is actually 2 to the power of 40. It might be 39. I'm going to have to think about it. Hang on a second.
But it's a big number. Yeah. And so my understanding is they put that in there because they wanted to make sure that if some weird situation happened, it would be capped. Purely theoretical.
Yeah, I do think on review it is 2 to the 40 minus 1. Kai occasionally knocks around on this chat. I don't know who's doing the admin now, but I noticed him here for several weeks.
Very cool. So I'm guessing you probably hadn't seen this site since I just put it up recently, based on your reaction.
No, I haven't. I've not been around. So if you've presented this over the last week or two, I've not been paying attention on the chat. I had my head into some stuff.
Oh yeah. Believe me, I don't expect you to be chasing me. But if you do come back here, you see anything, any suggestions on new things to go after, let me know. I I I tend to do a couple different things. I tend to be working on the background of data. I'm trying to make it so okay. So you're pretty knowledgeable in what's going on. You understand that apps that you're doing things with on the blockchain need direct connection to the blockchain, and they're calling that Web3, right? And that's very necessary, because you don't want to make wrong decisions about what you're doing with a contract when you're doing transactions. That's my take on it.
Are you using Web3 to get the source data, or
I am not, and that's kind of the point that I was getting to. So there's a lot of ways to get data through APIs and downloads and all that type of stuff. And so I'm going a different route. So this isn't data that's good enough to do transactions with, but it's good enough to show you what's going on in the system. And so what I'm trying to do is make it that at least my models, in my preferred method that I'm using, that I can do refreshes within a moment or two to get the most recent data. That's kind of where I'm situated.
so you're sucking it through an API, and behind that API, someone is going straight to the blockchain, and so it could be wrong, manipulated, but it's definitely a lag because you're taking a refresh for a certain period.
Yeah, there's a little bit of a lag for sure. Now I'm using Kodiak subgraph. Kodiak's a guy who's been part of the community for a long time, and actually had built a subgraph, and a subgraph lives on the blockchain, and it's something that you use to actually define an API and data, and it has a little bit of a lag, but it lives on the blockchain, and so that it just updates the tables on the blockchain, and then you can make an API call to get the data.
So it's like a roll-up. I mean, that's quite a lot of data, and that's stuck in somewhere in the blockchain.
Right. It's a roll up, but it's on the I guess that's a good way to describe it. But it is on the blockchain and it's predefined. And so this is why when you go to again, my interpretation, right? Not fact, my interpretation. This is why when I connect with a Web3 app, sometimes you get that lag time because it's got to go read real data from the blockchain. It can't cache it necessarily because that could be a problem for you, right? You need to make sure that you get the actual data from the blockchain. So you'll see these load times that might be a few seconds to a few minutes, depending on what you're doing with the web app, Web3 app. I guess we call them dApps, right?
Yeah. I haven't finished the tutorial of building one. Over at Ivan on Tech thing.
Yeah, I thought about taking some of those classes over there. I haven't done that though.
Yeah, I dove in and I couldn't help but fix some of the C++ stuff that was going on some of the forums. One of the tutors had to say, we're trying to get people to do it for themselves so they learn. So I shied away, but I just trying to adjust to it's a whole new environment and community. It's like, how do we play this game? And the videos, learning from videos is actually quite, it's good, but it's lengthy. The best way is, read the function book and look at some samples. The video thing kind of also sets your mind as to why are we doing this? Which is a bit abstract. It's a bit like coming from the I could exist perfectly fine without ever going near crypto. Now I'm trying to immerse myself in it. Why are we doing this? What will the outcome be? And pushing that back to get into something completely new.
Mm-hmm. Yeah, I can understand.
But yeah, he's got, in my simple understanding, a library now that enables you to connect to all sorts of blockchains, which means you can make a dApp that can talk to them all through an API, which goes through, I think, his infrastructure, which talks to those blockchains. But did not know about subgraphs. I've just search Kodiak subgraph and I'm not getting anything that takes me right into what that is. Have you got a good link, Crispy?
Yeah. Let's me saying Kodiak probably isn't great example of what's going on, but it's code AK. There's actually a Medium article out there on Hex data. This guy is great, man. I owe him a lot of gratitude. So this goes through and actually explains it. And so things like Hex, daily stats, and other people have used this information in order to actually get to the data. And it's all free, and you really just can't complain about our community when it comes to some of this stuff. I mean, now you can get to the GitHub here as well, and I'm reluctant to do this, but I'm going to push the button. I don't want to blow anybody's mind out there, but there's actually panels, there's pages out here where you can go explore each subgraph. And this one happens to be Kodiak subgraph, but there's one for Uni, there's one for Ethereum, there's a Hadron one. I mean, everybody, and you get to define whatever you want to put in there. You just, as a developer, you define these queries and what's going to be up there, and you pay a minimal price for it, but you pay a price in graph, which is a coin. And so you can come in here and look, for instance, since good accountings is easy, you can actually just go get a table of data by constructing a query. And these types of tools will even help you, do that. So if I wanted to see the last 10 or the first 10, we'll call it first 10 because that's what they use for the word, good accountings, I can come in here and order the good accountings by timestamp in a descending fashion, right? So I can look at the last 10, and then I can pick some data that I want to see. What else would I want? I've got block number, stake ID. You could look at the shares that came out. maybe the staker, just doesn't matter. I could pick them all and run this. You can see this ran very quickly, right? I mean, over on the right-hand side, you can see the data. And we can see that this is the latest, good accounting that took place. Now, to be able to understand that, I would need the timestamp and, when it happened anyways, and be able to go get that information, be able to convert that over to current date from this, this timestamp, which I do, but to be able to figure out when this good accounting happened. And it would have been for 3 point something or 0.3 something. I forget the math on it. But if we go to our good accounting page here, it's likely, if I go sort by good accounting date, that we should match this up in some way. So that was going up, go down, 29th. Let's grab this address. And so if we go over here, and I'll just do a where clause. These are pre-made for you. It's pretty cool, that you could do this. And I could say I want that staker address, put it in here. Okay. I opened this up too far. Let's open that up. All right, you see how it inserted the where clause for me, and now I can run it, and it will show me the information on the screen here. So there's only one for that address. That's the only where clause that I have. And let's see, stake shares to something. And if we go look, okay, so it's a very, very tiny, tiny, tiny amount of T shares, which I've gone too far to the left to be able to show it because it's a very tiny stake of 43, right? I'm not even sure why that was good accounted. There are a lot of things that happen that people do in the system that are hard for me to understand because I just don't have enough reference, right, to understand why they would do what they're doing.
Yeah.
So this is a better example. The 127 is really 12.73 T-shares. We have to divide it out because it's all in a different numbers to prevent, because I guess Solidity doesn't let you actually do decimals, right? So everything's got to be a whole number.
Right. Yeah.
Yeah. So for those who are inclined to do it, and there's a lot of Excel jockeys out there, right? I mean, for those who are inclined to do it, whether it's through Excel or the old Virtual Basic, C++, of course, you could do this, right? You just have to be able to construct your code. My point about going down this rabbit hole was with those types of tools that you're not relying on to do transactions, you should be able to get data much quicker as long as you have a storage location for the historic data. To be able to just continuously append. It's very similar to running a node, right? The node just gives you a direct connection, right? Allows you also to do transactions, but the node will give you a direct connection because you are part of the network and you have that data and it's being updated. But if you didn't want to run a node, Ethereum node, you could still get all of this data without having to go to a node or renting a node or whatever.
Yeah, I get what you're saying. If you were running your own Ethereum node, or you could go direct to it. But going through this graph thing seems like a good idea. You get JSON back. If you had your own Ethereum node, you wouldn't be reading JSON. So, or can you get the graph thing to look at your own Ethereum by hosting it on your your Ethereum node server?
Yeah, I think you can. I think there's probably a multitude of ways that you can do all the types of connections to get data and bring it down. Things that I'm probably not aware of as well, you know.
Yeah, no, I had no idea about this little branch. So I'm blown away and extremely grateful for you opening that up to me. Thank you.
Oh, sure. Yeah, yeah. It's you know, having freedom of data can only help us, right? I mean, it only proves the point. I mean, listen, 1/3 of the people listen to this could be like, "What are you even talking about this? I'm not interested, right? I just want to see a chart or I want to see a number, right?" And you got some people that their barrier to entry is, yeah, they understand everything we just talked about, but you know, they for whatever reason, technical or knowledge equipment, they're just not going to put it all together and get it. And then there's the other third of people that, hey, you know what? I build my own queries in Excel. I could go connect and get this data. Yeah, you can. You can. You know.
Yeah, yeah. I mean, that's, if we open up beyond Hex in its application and go back to that point of crypto being useful in the outside world, one of the interesting things is that whole GraphQL kind of technology, seeing it in action against crypto actually shows an application for GraphQL itself. And imagine if on the other end of that blockchain was actually, moving a crane or filling my fridge up with food or something else. Having this sort of whole ecosystem where it's all transparent and very accessible at extremely low cost is kind of the data future, the Web3 kind of concept thing.
Yeah, I think you're on to something. Yep. Yep. I can see that.
That's why I'm here. It's just like, what are the guys up to now in crypto land? You've just given me my Saturday morning mind expansion.
Well, imagine this, right? So today I'm looking at Hex, I'm doing this, right? Well, there are graphles already in the works or done for Pulsechain. And I was less inclined before Pulsechain to be digging into this kind of detail. But with Pulsechain, I want to know a lot of different things. I want to know all about PulseX. I want to know what's happening with Pulse. I want to know what's happening with Hex, just to name the first three that I'm super interested in, right? And there's probably dozens of other things. I'm going to want to know what's happening in that system. And, but maybe on a personal level, maybe other people want to know. But all that information is available, will be available. It can be as quick as this. Now, right now, if I go push the button to refresh this particular setup, this is being taken from CSVs that were made available by Hex Daily Stats. There's a data dump that's out there that you can go get CSVs, but it takes about 15-20 minutes to update. That's fine, right? I can do that. But and it works, right? I mean, look, I got data, right? But what I want and what I've been working on is to make it so that I go push a button and it's 1 minute, 30 seconds. And in this way, be able to monitor what's happening. I don't have to rely on a third party maybe or an intermediary to provide the data, because when I see something happening on the blockchain and I get something like a Hex win bot notice, I want to go look and dig into that and see what's going on. And I do that now through Ethereum, through Etherscan, but I've got to go through the multiple steps to get to the data versus go to a panel, throw in, the address and see it.
I get you. So the Winbot thing is a Twitter thing. You see some activity and then you're going to go to Etherscan and drill down and see what the transaction was.
Yeah, that's one of the ways. There's also some on Telegram as well. Yeah.
Okay, just going back to my guessing the optimal architecture, which is a Pulse node with the QL sitting on the same server, and your Hexfire IO actually possibly just putting the deltas in JSON and sticking it into something which your Power BI can read and update. Then you're only pulling deltas, and Power BI is going to an optimal data store. You having pulled it off your own Pulse node via custom QL, give me this data, and only give me the deltas. That's is that what you're thinking?
Yeah, minus the node part, because now I may have a use in the future for a node, but I don't have a use for a node today. If I can get all the data without running a node. And so now if I want to run transactions and emit transactions myself, I suppose I need a node. And I'm out of my depth because I didn't even know much more than saying the word node and understanding there's a copy of the database, or a copy of the system state on that node. But because the graphs exist out there, you can just go connect with a subgraph and pull the data down. And this particular software, which I chose to use, it actually comes with a database, right? You could ingest the data and it'll store it for you. So I'm able to do exactly what you said, do incremental updates to it.
Right. And has it got an easy to use, I'm assuming Power BI's got a Microsoft SQL database or something behind it, and you can put in, I'd call them RESTful calls to the GraphQL to pull in the deltas and insert it in your database.
Yeah, there's some limitations to Microsoft in this way, but yes, you can. Like, it's not going to give you, so this particular software won't actively refresh moment by moment, for instance. All right, like I could do on my own website if I was going to use JavaScript, right? I could make the JavaScript trigger every moment and update, or even modify.
Top Cat.
The Top Cat is here. I guess we just get the train whistle. That's it.
Normally we get an announcement that we should be getting on the Pulse train.
What's this Excel sheet on the video? What you are showing, guys? What is this?
Hey, Top Cat. Yeah, I was just kind of nerding out with Woody here. This is my projected good accounting. Well, not projected. These are the good accounting stakes that are out there right now. How many have been good accounting, the totals and stuff. It was just some information up on the screen.
Got it. Yeah.
I'll go and learn about that QL thing, Crispy, and look forward to talking to you again about it.
Yeah, Woody, no problem, man. You'll enjoy looking at it. You're going to find out there's a lot of information out there, and there's a lot of possibilities to go get more data and consume it and do all this stuff. Yeah.
I'm particularly interested in that bit that you said where the blockchain is actually, the roll up is on the blockchain, and that QL thing is reading that, it's putting a GraphQL language over the top of it. I'm interested where that meta model is, And yeah, there's a bunch of stuff to study. Thank you.
No problem, man. If you just look up Kodiak and Medium, you can get into the Git is it
Yeah,
GitLab?
I followed that. I've got that in my notebooks. I'm on it. Yeah, I got it. I kept enough. Thank you.
Yeah, it's GitHub, and there's all sorts of really great information out there. Hex Daily Stats has one as well, and you can search the chats and easily find that, or go to theirs as well. They don't have a graphle, but they have their own documents in GitHub, and you can go grab that information and dig in. Again, my thinking on it and going in this direction is I'm trying to have the smallest possible footprint with the best performance in getting the data. And all my, I've got a couple programming buddies, right? But they're like, I don't understand. Why don't you just go get a database and just use the database and load it? And I'm like, yeah, but I don't want to pay the money for it, and I don't want to host it on my own server, and I don't want to put it on, I could use a cloud service, but cloud service will run you $5,000 to $10,000 depending on how much you want to do with it. And there's free options too, but those could be problematic maybe in performance. So.
Yeah, you can burn some dollars just playing on your own, let alone opening it up to the public. Yeah, you can. I mean, running the Pulse node, if you run that in the cloud, I burned a few dollars doing that, I can tell you.
Oh, yeah. So you understand more than I know about this for sure.
Well, I'm a very sort of low-level chap, so I'm coming this sort of bottom up. I get it, but I can't see anything at the bottom, so it's really great to see you looking at sort of top down. And yeah, I build things, but I'm quite happy just walking through the woods, just listening to the birds sing. I don't. Do you see what I mean? You sort of introduce me to people's needs and concerns that I wouldn't have thought of.
Oh, cool. Good. Well, I learned a couple things too, like how to shift, man. I didn't quite grasp that.
Yeah, it's like a sort of informal user group meeting, isn't it? I mean, you sort of just walk into the club and people are doing interesting things, and you banter and grow. I mean, we'll see how exciting the weekend. Who else joins us with insights?
Yep, it is. That's what I've really enjoyed being part of the community last few years for sure. For that reason, those people are just willing to share so much information. I mean, not everybody, but that's okay. Enough that we're able to really interact and learn a lot of stuff, and it's cool.
Yeah, I'm going to break for a bit and go and get some grub and a cup of coffee.
All right, buddy. All right.